Searches for a second job reached a new all-time high. There's now a 30% chance of a recession in 2026, and US consumer delinquencies are surging. Yet, the stock market keeps pumping and is now less than 1% away from new all-time highs. Something big is about to hit the stock market.
As you probably know, the stock market was pumping today, but there are underlying things throughout the economy that are worrying investors a little bit, especially here in the short term. As we can see here, second job searches hit new highs over the past month. That is a pretty crazy thing to say, and there's actually a pretty high chance of recession in 2026, sitting around 30%. This did fall a little bit today as, the government shutdown news has been impacting this, but nonetheless, 30% is still a pretty high number, and whenever we think about that going into next year, if we do end up seeing a recession, we could see an overall pullback start to take place and a bigger shift maybe start to happen in the stock market. But I think that the second job search terms hitting those highs is a big emphasis on consumers being strapped right now. And something else that we've looked at and have been talking about a lot over the past couple months and even throughout 2025 in general is consumer delinquencies. Delinquency data is surging right now, so much so that auto loans are actually at their highest delinquency numbers in 15 years. Credit card debt is at their highest delinquency numbers in 14 years. And at the same time, student loan serious delinquencies, my gosh, look at that spike to the upside. Now, there is a caveat there. Missed payments began reappearing on credit reports as the expiration of the student loan relief period ended up happening. But nonetheless, we are seeing consumers and delinquency numbers rising in quite a bit, and it just shows the consumers are kind of hurting in the short term.
Oh yeah, and there's no safe area, whether you look at auto loan data, student loan data, credit card data, or even mortgage delinquencies, they are all increasing. Mortgage delinquencies increase, and they're at their highest rate in 8 years. So yeah, we are definitely seeing more pressure being put on the economy. Yet, Tom, when we look at the stock market, it keeps on pumping. And as of today, it is now less than 1% away from new all-time highs. A lot of people see this and, naturally get confused. And in the short term, the stock market is a popularity contest. It's like a voting machine. But in the long run, that is when, the real value gets factored in. So the stock market isn't always rational in the short term. And when we look at stock prices right now, Tom, this government shutdown news has also been having a big impact on the short-term price action as well.
It really has. And last night, the Senate actually passed the overall funding bill that people have been really waiting for. 8 Democrats, again, voted with Republicans and ended up passing 60-40. Now this is going to be going to the House, and then ultimately Trump can end up signing this into effect. And now Kalsi's pricing in the government shutdown only lasting 43.2 days. We can see it kind of evening out here. So they are pricing in for the shutdown to end over the next day or so. So I will be watching this very closely, Mike. Tomorrow being Wednesday, and then of course Thursday if it doesn't happen on Wednesday. But this is a big deal for the overall market. It's been causing a lot of this buying pressure in the short term. And as we know, the SPY recently had been in a pretty bad downtrend where we had seen the SPY bounce off that trend and continue lower. But in the short term, we're now actually rocketing well above the trend and breaking through some pretty key resistances again too.
Yeah, definitely. And I think over the past week, it has been really emphasized how important it is to stay adaptable in this crazy market. So when we look at SPY right now, Tom, what are some key levels to look forward to? I know we have all-time highs getting closer and closer, but in the event we do see a little bit more profit taking come into play, also give us some levels on that front as well.
Yeah, so of course the all-time highs are going to be one of the bigger things that people look out for, and that is up around 689.70 to 690 essentially. I'm calling it 690 because I want to look at the nice whole dollar level up there. So of course there's a lot of levels between where we are though, around that 683 point and 690. I'm definitely watching 684 to 685 as a big resistance zone for tomorrow. If we end up seeing the SPY get to there and end up breaking through, I think that we could end up seeing a more of a rip to the upside. So keep your eyes on that for the SPY. There are a lot of resistances in play though past that, like 687, 688, and then 689, because the SPY was very volatile as it was touching those highs. But if we do see profit taking come into play, I'm really watching for an overall gap fill situation back to the downside. There's this big gap on the SPY's chart from Friday into this week, and that goes down to around 672.40 to 672.50. Of course, that'll be a major support. Before we get there though, watch 674 and 676. And today, I thought it was very critical that the SPY was able to really hold above that 680 point into the end of the day. It was really good to see SPY hold that range, and as long as it keeps holding that over the next couple days, I think we could actually stay bullish. But if we start to break back under 680, that might be kind of the green light back down to some of these larger areas of support.
Yeah, and what's exciting about like the market that we're in now is that we have multiple big things going on at once. Of course, the longest shutdown in US history is about to end, which of course has a big impact and played a big role into this recent pump. Like we've shown a lot over the past few days, government shutdowns tend to be pretty bullish for the stock market once they end. We have even more data today further showing not only instances at the like top half of the screen where you can see how the market moved after shutdowns ended, but we also have other stats that basically show, like if you look towards like the bottom half of the screen, you'll see an average after signals and an average after all periods row. We can see that on average, we can see that the market performs around like 2 to 3 times better after a shutdown ends compared to just normal market conditions, which is definitely a good thing to know as well.
Yeah, definitely. And even whether you look at the short term or the longer term, it seems to be pretty consistent here, going all the way out to 1 year. Even with 1 week, the average after signals ends up showing a 1.10% increase, where on average it's only 0.2%. And I thought the 6 month and 1 year readings were pretty critical as well, with 6 months reading 11.04% after the signals, but a 4.89% average on all periods. So definitely some discrepancy there between what's going on with the shutdown ending and what normally happens in the market. And I know that we looked at data yesterday that showed that November and December were generally pretty bullish as well. So I'll keep all this data that we've been watching in mind, because the market's been ripping right back up, and that downtrend did technically break here.
Yeah, and speaking of the market ripping, the S&P 500 has actually remained above its 50-day moving average for 134 straight days. And this is actually set to be the 5th longest streak ever. And we do have some data here showing that this can present a little bit of like a short-term risk, as we can see the past instances here. So I think that is something worth keeping in mind. What I do like is that if we do see a pullback, at least historically speaking, these pullbacks don't tend to be anything like too crazy. But of course, this is a risk to keep in mind. As traders, we have to stay adaptable, and I think it's worth factoring in, of course, the generally bullish shutdown reopening news, alongside the historical point that we're at, where the market has just been running so hot for so long, where, it gets harder and harder for it to, keep this train running.
Yeah, exactly. Like, we look at SPY from April lows. My gosh, we've broken a new all-time highs, broke past the previous high around 607, and almost touched $700, all within the year 2025. I mean, that is pretty insane to say. It has definitely been volatile, and something to keep in mind, especially when looking at this data. But gosh, I mean, this is very negative in the short term. Seeing the 2-day data end up coming in where the market's green 0% of the time, and even 1 month later, with the market going green only 25% of the time, that is a terrible reading, and something I will definitely watch out for. One caveat, though, is that there is only 4 of these readings in the past, so keep that in mind, where we don't have a ton of sample size here, and I think the bulls will like to hear that at least.
Exactly. And then we do have a little bit of a special report today where, believe it or not, Tom, SoftBank fully cashed out of their Nvidia position last month. So today they revealed this. They closed out their 32.1 million share Nvidia share position for around $5.8 billion, and they're supposedly unwinding this position to pay for a plethora of other AI projects, from Stargate data centers with OpenAI and Oracle to even like robot manufacturing sites in the US. And I'll say that Nvidia did not like this news today.
It really did. And if we go and we check out Nvidia's stock, it was actually one of the more negative stocks today. And I thought this would have a bigger impact on the S&P 500, but a lot of the rest of these stocks in the S&P made up for this. Nvidia actually closed down 2.96%, and we can see it was falling down in pre-market and even at open, a pretty big drop. But it did have a pretty decent end-of-day recovery, I will say. But nonetheless, I'm watching tomorrow very closely with Nvidia. It's getting closer to a big support range between 190 and 191. It actually almost bounced at 191 at its low of day from today. And if we actually go to the Bookmap here, 190 is a pretty big buy wall. Like I said, there's 314,000 shares stacked up there. We can see on the X-ray vision, and Nvidia has been having some trouble at $200 recently. Since it broke back below, that's going to be a major resistance. So watch that overhead with 434,000 shares stacked there. And even 195 was pretty large today with 145,000 shares stacked. If you guys want access to the Bookmap and the X-ray vision, check out the link in the description down below.
Definitely. Yeah, and Nvidia is definitely in play right now with this news as well. Let's keep it close on watch, and if we do see a return closer to that like 190 area, that can make for some pretty big and volatile moves, and we can definitely see more profit taking come into play. Hopefully Nvidia doesn't even get to that point, but either way, let's keep it close on watch, especially considering it is the heaviest weighted company in the S&P 500 and the highest valued company in the world. In other news, Tom, what is going on with the schedule tomorrow in terms of economic data and earnings?
Yeah, here's what's going on tomorrow. We are going to have some Fed speakers as well as some NBA 30-year mortgage rate news. Honestly, I don't think anything too crazy will come of that. But of course, if Fed speakers do end up saying something about rate cuts or their outlook on the economy, that could end up impacting the market at least a little bit. And of course, we were supposed to get a lot of data this week. If the government does reopen, keep in mind, data will be released, but it will be delayed. So this data that was meant to come out Thursday and Friday will probably not be happening. What will be happening is that we'll be seeing a lot of data from the past start releasing until we see the government catch up.
Kind of scary, but good to know. And then looking at the earnings lineup, there's nothing like too crazy for tomorrow. We do have Circle set to report before open. This has been a hot stock over the past year. And then on Thursday, we do have like Disney and a couple other stocks, but earnings are definitely winding down a little bit. So keep that in mind. And besides that, Tom, let's jump right into the fun stuff, which are some setups and predictions. A stock that is definitely on my radar is Apple. This stock has been recovering pretty well over the past few months, and they're actually getting closer to their own all-time highs. We can see they had a lot of momentum today, and they're getting closer to retesting their all-time high on the daily chart, right around $277.32. Right now, the stock is trading right around $275.27. But one thing to know about Apple is that they actually made an intraday all-time high right around that $285 mark. So that will be like the main resistance, but it has increasing momentum. We're getting closer to all-time highs, and if we do see a break, we definitely can see some more buying pressure come into this one, and the market's getting close to its own all-time highs as well. So either way, Apple's on my bullish radar, but it has to keep up this sort of bullish price action.
Yeah, I would love to see it break out above 277 here in the short term. Whenever I talk about Apple, it's definitely approaching those highs, and it's had a lot of strength as the iPhone 17 sales have really brought in a lot more optimism into Apple this year. So yeah, I'll keep it on the radar, Mike. It's definitely in play right now, and one of those stocks that really fueled the SPY today. With my first setup, though, I'm actually looking at quite the opposite. I'm looking at more of a downside move on CoreWeave. Yeah, CoreWeave is down 16% because they reported earnings yesterday and it did not go as planned. This was definitely a pretty big blunder for this stock, as a lot of traders were really hoping that it would not fall under $100. But unfortunately, that was the case, and the $100 psychological level was broken, and it was actually broken by quite a bit. So I'm really just looking for more of a downside momentum-filled opportunity with this on the earnings continuation. If we see a break below the low of after hours here, right around 87.50, then I will watch for that continuation to end up playing out. The main thing, though, is to just make sure that the momentum's there. Look at how much momentum was coming into CoreWeave at open today. I could see the flush continuing and another big red day like that continuing to play out. And as we go to the daily chart, there's that major support coming up around 85. And if we see that give out over the next few trading days, I think that's where the momentum will really start to pick up even a lot more.
Sounds good. Another stock that is close on watch is SanDisk, ticker symbol SNDK. This stock has been going beyond insane over the past few months. Since September, it's up over 400%, and this chart is just like an exponential trend higher. It's on my radar for a potential reversal, but with setups and situations like this one, you have to be extremely careful because there's no way to call the exact top on when the stock will finally reverse. We know right now that it's very overextended. It's moving in a very imbalanced way, and it's in a sensitive spot. Once we start to see the stock roll over, that is when a lot of these leveraged longs will start to get stopped out. It's when more short sellers will come in, and a plethora of other self-reinforcing bearish effects on the stock. SNDK is on my bearish radar, but again, we need to see confirmation first. There's no way to know. There's no way to call the exact top.
Yeah, that's the main point here. But whenever we watch it in the short term, keep it on the radar for the next few days, the next few weeks. And once we do start to see it turn over, that's where we can really start to take advantage. So I'll be watching it very closely. I agree. I think this thing is getting crazy. I was actually measuring it from where it came onto the market, Mike, and even from its recent low, and it's up 870+%. That is quite the move this year. But with my next stock, I'm looking at Moderna to the upside. Now, Moderna is not usually a stock that I love to play, but if you've actually watched the channel for a while, you do know that I love playing these types of channels like this, and I love the way that Moderna is bouncing off the lower end of its support. There's a major support around $23 to $24 on Moderna, and again, it held up in the short term, and we're actually seeing good confirmation back up from this. Most of the time that it's bounced off support, it's gotten back up to that $29 to $30 resistance. That's what I'll be watching for tomorrow. I'm not necessarily looking for $30 to touch as a true hard target, but I could see it breaking above its high of after hours today, or just high of day in general, around 2660, and continuing the trend off of that support bounce. A lot of healthcare stocks were in play today. Moderna was up over 6%. Now, I was even looking at other stocks like Novo Nordisk, for example, which really crushed it, 6.99%, and even Pfizer, which was up quite a bit, hitting $25.50, up 4.59%. So just keep the healthcare stocks on watch, but especially Moderna with that support.
Sounds good. Yeah, those stocks did go pretty crazy today. I will also keep them close on watch. And besides that, let's jump right into today's momentum plays. And with the first one, we have Archer Aviation, ticker symbol ACHR, to the upside.
Archer almost got to $9 today. If it can break above 9.00, then watch it to the upside.
All right, with the next one, we have Barrick Mining, ticker symbol B, also to the upside.
Yeah, Barrick, if they can break out above 36 just at their high of day, watch them up. Another nice 2.9% pop for them.
And then we have NewScale Power Corp, ticker symbol SMR, to the downside.
Yeah, another negative move here out of some of these growth stocks that have been a little bit overextended. If they end up breaking under their low of day at 2640, then watch them to the downside.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. These stocks are volatile, so you need to protect yourself. If you need help with that, check out the Key Lessons channel in the StockedUp Discord. It is completely free. And let's jump right into today's $942,000 big money trade. And today we are looking at ticker symbol SITE. Today, the trader bought the 140 strike call options that expire on February 20th of 2026. The trader here is risking around $943,000 to make around like $4.06 million. This is a bullish trade where they want the stock to go up. This company is the largest national distributor of landscaping products across the US and Canada. This stock has been doing pretty well ever since it IPO'd, but over the past few years, it has been kind of like choppy. The trader here clearly believes that it will start to rebound. I think this is a very interesting setup. I like how these options have time to them. I like the great risk reward. And I think the biggest risk here is if we will see the stock get above 140. That is a fair move to make. But then again, the trade does have time to it. So we shall see.
Yeah, that 140 point is definitely pretty far. If it starts to shoot up there pretty quickly, that would be nice, of course. It does have time, though, going out to February of 26. I like how it's, just under $1 million. It's not the biggest big money trade ever, but it's definitely larger than some of them that we look at. Whenever I think about this company, it's definitely an interesting one that has been very choppy and flat, for the past few years in this major range. And in the short term, it actually bounced off of a very critical support. And now this support is not going to be a support level that that is going to be the absolute low. For example, we can see recently it actually bounced around $100, but there were different points in the past where this stock really bounced off this 117 to 120 range and made a great recovery well past 140, touching 150 plus both of those times, and I would even argue pretty quickly both of those times as well. So I'll be watching in the short term very closely here. Maybe they're looking for a type of support and maybe dip buy type of setup, and that's what I think that they're going for. And in the short term, there is that low around that 115 to 116 area. If it starts to fall below there, that's definitely where I would start to get worried about the play.
Sounds good. Well, let's keep it close on watch. And if you are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single day, it takes us a long time to make these videos to cover everything you need to know about the stock market, whether it be delinquencies data like we covered today, SPY levels and analysis, daily big money trades, historical stats, important news, information, and upcoming events to pay attention to, and so much more. When you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. And Tom, let's also give a giant shout out to today's member of the day, Raphael in the StockedUp Discord. They had some great gains the other day with some QQQ call options. So huge shout out to you, Raphael. Keep up the great work going forward. And it is awesome to see gains like these. If you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get access to the StockedUp trading floor. Today, our Surge Bot had some pretty nice action with some app put options that moved up by 236%, Rivian call options that moved up by 200%, Apple call options that moved up by 109%, MRK call options that moved up by 107%, Pfizer call options that moved up by 78%. The list goes on, and of course, there were a handful of duds mixed in there as well. You also get access to the big money trades every single day before we talk about them in these nightly videos, and a lot of cool features like we could see on the screen right now that actively show which big money trades are moving up the strongest. We can see like the current list has some options like GMED and others that have options up by over 1,000%. Like the leading one right now has GLW call options up just under 1,300%. GMED calls up like 666%, lift calls up 491%. The list goes on and on. If you're into short-term trading, check out the trading floor. It's the place to be, and you can save quite a bit with the link in the description and the comments down below. But the market is definitely heating up quite a bit. We're very close to all-time highs, and we have some interesting things going on in the economy behind the scenes. So we should have an exciting rest of the year. Thank you all so much for watching, and let's crush it in the market tomorrow.